Hi, welcome to the Victor H Investing live stream. And today I have a guest, Costa. How you doing today?
I'm doing great, Victor. Thank you for having me. Looking forward to
Awesome.
the conversation.
So Costa runs a YouTube channel that I've been watching for a long time, and I wanted to have a conversation with him. I thought it'd be really interesting, and I really appreciate you joining today. It would be great to have a conversation. Most of the viewers to the channel um, are investors, most definitely, and they range from early on investors to veteran investors, frankly, that are pretty impressive in their approach. Let me just open up with a couple of things. First, you know, as shared on every video, I'm an individual value investor. I share my experience, my journey on YouTube. And I don't recommend you buy any of the stocks we're going to talk about. I don't recommend you sell them. I don't recommend you trade on any of the information that we're going to talk about. We offer no financial advice. It's really just, sharing of experience, and hopefully you find it interesting. So, as we approach the conversation, the stock market did have another interesting week with stocks. It was a 4-day trading week in the US. We had Monday off,
Yep.
which was nice, but we had down days and followed by an up afternoon. But before we jump into that, let me just kind of quickly introduce Costa. As mentioned, Costa uh, has a YouTube channel, and I really appreciate his approach where he takes more of a finance education, YouTube channel. And one of the things that is a big compliment to him is most of the time I'm not alone. I have 3 monitors in my office here. I could watch a YouTube video with like maybe half my attention and kind of do something else, but not with Costa's videos because I want to absorb it all. I want to take it all in. And I think it really does take uh, some interest and concentration to really get the concepts. And I really appreciate where he takes his conversations in his YouTube videos because it reminds me of some of the principles, or it teaches me some of the principles in finance that are important. So, Costa, let me just kind of turn it over to you. If you could do an introduction, that'd be awesome.
Thank you very much for the kind words, Victor. I started the YouTube channel a couple of years ago for a couple of reasons, but the main one was, I'm coming from a family that didn't have much. So growing up, finding the right books was even a challenge. The internet hasn't picked up yet, so it wasn't that easily accessible. And growing up, I think I've noticed, well, I'm accumulating a lot of knowledge. So YouTube provides a great platform to share all of this. And why not? Maybe there are others that are where I used to be that would like to have certain source of knowledge and that find it useful. And on the other side, I get to practice teaching to some extent, right? So how do I structure a certain analysis of mine? How do I present it? How about you know what would the questions be that the viewer would have? How do I make sure that those are included in the video and so on? But I prefer to have few high quality videos rather than having one video every day. The goal is not to make money, so that really makes it easy. I don't have any pressure by anyone. That really helps. But one of your questions was to share about myself. My background is in finance and accounting. That's the formal background. Although I don't really feel that I am defined by that, as I have a lot of other interests. I do enjoy occasionally program a bit, so I do a bit of Python programming. I'm interested in. You mentioned before the conversation started that you visit Amsterdam. You saw a football match. I do follow football or soccer in the US. I play football, soccer as well. I'm interested in various business cases, marketing. So I just try to. I have a lot of interests, although I have to figure out, at some point, what if I want to specialize. But so far, it seems that being a generalist suits me best with a bit higher knowledge when it comes to finance and accounting. Um, I think that would be a short introduction. We can cover a lot more. Of course, I mentioned to you earlier, I understand that, of course, the viewers know you. I don't know me as much. But I do think that we should maybe cover more topics that are a bit more general, that maybe they can make use of. Of course, it's good to get to know me, but that's not really something that will be useful in their day-to-day lives, right?
Yeah, you
I
got
do
it.
agree with you that, and by the way, I should point out, uh, if you're an individual investor, I think that following others or making decisions based on others' opinions is probably a big mistake. So I know you made a disclaimer at the very beginning, and that's definitely fair. But if somebody if somebody maybe recognizes himself or herself in this group of being influenced by somebody's opinion, that's a difficult position to be in, and it's difficult to basically be. The question would be: are you actually the one investing, or are you acting upon other people's opinions? And it can go really bad, of course. So
Sure. Yeah,
do
and
your own due diligence and have your own arguments why do you invest in something and why you shouldn't, and you know.
yeah, and I totally agree that each investor needs to make their decisions individually. But I would say this, that why have I been watching YouTube for the last, intensely for the last 15 years? And especially, over the last 10 years, um, is that, I studied finance and accounting, and I've worked in industry, and I've invested in stocks for 30 years, and I've invested in
Yep.
ETFs and mutual funds. I've been saving up my whole life. I've been working hard and saved up quite a bit. Now, when I learned so much, and there's different ways of learning, right? You have
Sure.
textbook learning, which is great because you learn the arithmetic, you learn the
Yep.
principles, and so forth. But when you see somebody, especially an investor on a YouTube channel, really talk through an investment from very beginning through
Yep.
their buying, their execution, whether they made or lost money, what was the
Sure.
reasoning behind it. I find a lot of useful experiential um, knowledge that I don't necessarily copy. I just understand that, hey, that makes sense, or I like the process. I oftentimes find myself watching videos of people that I don't agree with when it comes to investing.
Yep.
I'll give you one example that everybody knows: Jim Cramer. I've been watching Jim Cramer for a long time. I don't invest like him. Jim
Sure.
Cramer is a momentum investor. He takes the stock of the era. I don't think he could say 10 words without saying NVIDIA 9 times. He
Sure.
loves
Yep.
NVIDIA. And you know what? He was right about NVIDIA, and he's riding the stock that everybody wants to talk about. But what I get out of listening to Jim Cramer, and I can only take him in doses, is sentiment, market
Mhm.
sentiment. Jim
Sure.
Cramer is the most popular when the market's really happy and really greedy. And I get that from listening to Jim Cramer and observing him. And I could, name 25 different people online that I
Yep.
focus on. So that's what I would tell everybody is, listen to comments from other investors, but try to draw out the value out of that conversation. And then always you make your own decisions. Nobody's telling you to buy a stock or sell it.
Yep.
So very good stuff.
Yep. I
Good.
agree.
So
And if I may add up to that, it's, today you've been investing for a very long time, and I'm sure that you can share more about how the environment has changed over the last 30 years, right? We have a lot more data, not always necessary a useful information, right? So I think the challenge today is not to find the data, but to figure out what data you can turn into useful information. So, for example, Jim Cramer might be some sort of useful information for a certain reason to you, and that's great. And maybe for someone it isn't. So I do see investing as something personal. So you need to find the data sources that are useful to you. And it's very important that I'd say the danger of the internet and basically having access to all this data is surrounding yourself with individuals who think like you, that basically confirm your thesis. Because what happens then is it's like forming a cult, right?
group
This is
thing.
the company that you like, regardless of what happens. And by the way, I think it's the easiest to see that on Twitter, where uh, I mean, there are a lot of examples, a lot of companies, including Tesla, for example, or Palantir, where even if it is a good or a bad decision made by the company, there is always a side to take to paint it as something positive, right? So that, of course, it's more of a storytelling approach. But look, for some people, it works. It gives them confidence. I remember, for example, with Tesla, and by the way, I do have a small portion of Tesla in my portfolio. But for example, when there was the price, I think there were both price increases and price decreases at a certain point on the last couple of years. Um, I saw the same individuals comment how the one thing is positive and the other one is also positive, and that doesn't really add up, right? If you make an argument that what is positive, then you cannot make the same argument that the opposite of that is also a positive information. So that's why it's very important to choose your data sources wisely, to be critical, to make sure that you don't trust someone blindly and just follow whatever comes out of their Twitter account or YouTube account, and just think for yourself. So absorb the information that you find useful and then make your own call. So that
That's
that
good
would be
advice.
kind of my summary on that.
So let's stay within this area of conversation, and if you
Sure.
could maybe comment, historically, let's just say, last you pick last 20 years, last 30 years, historically, how has investing looked, and how has it evolved to where we're at today? Briefly, but most importantly is in the last 5 years. I think you can write a couple books on the last 5 years. We
For
had
sure.
a pandemic, which was incredible, and we've had incredible infusion of money in the U.S.
Yeah.
By the Federal Reserve. So we just had a lot of artificial things come into the picture, as well as we had a significant correction. We had one correction in 22, a couple pullbacks along the way.
Yep.
So I'd love to get your thoughts on, this is the environment that I think we find ourselves in. And I know that we are all kind of, and I use this kind of jokingly, we're all amateur, fortune
Mhm.
tellers, where we're thinking, where we're at, I would think that it might be likely for this to occur from a stock perspective, economy perspective. That'd be interesting to hear.
Yeah, I agree with you. These were once in a lifetime events, probably, hopefully, right? Especially the pandemic. And the market is volatile; it goes up and down, and it is also a test for every individual investor to see if you feel comfortable in being an investor, because it is going to happen once in a while, right? Um, my approach is not that much dependent on the data from others. We can touch upon that more later. Um, However, of course, external events such as COVID, of course, they have an impact on the valuation of any company. Um, I think it was interesting to see some price movements that were irrational in both directions. So you had companies that, uh, like the airline companies at some point, or Airbnb, companies of Airbnb a bit later with the IPO, but companies that were adversely affected by COVID, where there was a significant reaction to the price, and then it recovered, and vice versa, companies that benefited from the pandemic, such as Zoom, for example, that had the reverse in the opposite direction, right? So they also had a correction. But if you take a look at, and I remember I was looking at Zoom somewhere close to the top, and I was trying to model to figure out, does it make sense? Like, I see the market cap, I see their cash flows. We are in the pandemic, and I just cannot figure out how is it, like, I cannot justify its price. So to me, that was an example of, okay, there are companies that are now being traded at ridiculous levels that cannot really be justified. Yeah, this was um, a great example, and I know I covered it. I don't remember when, probably somewhere in 2022, but it went down a lot. You see, and by the way, it is a cash flow generating business. It's one that works well, but to justify that price, and I would argue even above the $100, I just couldn't find the variables. I couldn't make any case for that. So it just kind of points out that when there is sentiment, right? This is again, we're coming back to the sentiment. We have pandemic, and now everybody expects that we're going to be at home, not only as individuals, but students at home, professionals who can work remote. Now they have to have certain communications platform, right? The teachers, maybe some hospitals as well. So the so-called total addressable market of Zoom keeps expanding. But there comes a point when you can no longer make a case that it's fair, right? And by the way, Zoom is not the only option out there, right? There's Teams, right? There's Google Meet. There's a lot of other competitors. So back then, I just thought this makes no sense. Now, at the same time, I didn't short it simply because I never do that. I don't find that a strategy that I feel comfortable with. But obviously, if I did, that would have been a great choice.
Yeah.
So these one-time events really illustrate how irrational the market can be in the short run. Of
This
course,
is a
in the
good
long run,
example.
it's fine.
I think so when we hit COVID, right? I still remember, and this is what I was thinking when COVID hit. If here in the United States, if we are locked up like this, because I thought everybody go home, you have to stay home. And I thought, if we have to do this for 2 months, there's going to be mass hysteria. There's going to be like,
Sure.
just chaos like you wouldn't believe. And to my amazement, everybody just followed what was supposed to happen. We socially distanced, and it happened. And meanwhile, I had kids at home. We had two sons that were being educated. One was in college, one was in high school, and most definitely Zoom demand went up.
Yep.
They went up 632% in value in what looks to be less than a year's time. Incredible.
Yep.
And then from there, it really fell. It's fallen 89% from the very high. Incredible. I don't know that they'll ever get to that stock price that they once achieved. But if we look at the 1 year, it's a different case. This has been a very difficult stock, like you just said, a very difficult stock to figure out where's it going to go? What's going to happen to it?
Yeah, I agree. And it's again, we come back to the market sentiment, right? If you take a look at a lot of companies, actually, there isn't really that much that fundamentally changes in the short run. Of course, there could be there are companies in the software industries that would introduce one new product. Let's assume that product has 5% change to fundamentally of the company. Then that's what you should expect, like a 5% move or a 10% move. But you see significant price movements on earnings release, right? Why? Because there was guidance and it was beat by 2%. Now the share price is up 20%, right? So if you take a look at the impact of new information, there is always, and maybe part of that can be attributed to fear of missing out, right? If you take a look at NVIDIA, I think that there is also a case there. It kept going up, and there's always a new information that is a bit better than the previous one. But yeah.
Wow.
So I'm not sure. I have not looked into the valuation of NVIDIA, but if you take a look at the events that happen, yeah, obviously it is one on the forefront of the.
Yeah, I owned
technology.
NVIDIA in this era here, and I did well, and thought that, you know what, I'm going to switch horses. I also owned TSM, and I bought Broadcom and then sold Broadcom at the end of the 2023 year. But I did not see this coming. I'm like, holy smokes, what happened? But once I understood what was going on there, I did invest more in the AI trade, I guess. But what other thoughts do you have on NVIDIA?
I think it's a great example of not just NVIDIA, but there are a lot of other companies throughout the history that point out to the innovation of something new, right? Or the innovation of a product that has not been there. Not like an innovation of a specific feature or a slight change, but truly innovation. And I think Apple is also one that probably disrupted the space, not just with the great products quality-wise, but also with the way they look. Right? They have really aesthetically pleasing products, and eventually that reflects in the behavior of the consumers, and then it reflects in the financials, and then it reflects in the in the share price. So these are, I think, the lesson here is every company that is really successful ultimately has great products, great services, and great management team. So if you can identify that before the rest, then you'll do better than if you just look at the financials. The financials are in the rear mirror. They look back. This is what happened, but not this is what is going to happen. And it's not easy to do that, right? It's not easy. There will be plenty of companies with great products, but somehow they will not make it, right? It could be due to financial reasons if they don't have enough funding. It could be, another competitors. Take a look at Amazon. They're disrupting so many different industries. So imagine you have a great product or great service. However, Amazon steps in and it offers it for free. If you have Prime, there's no way for you to compete, right? So the environment today is slightly different, but if you have a really truly new product and it does really well, then yeah,
Yeah.
that's one of the recipes to succeed. And I'll share another a company that it's not that well known, and it's not about the company so much, but about the maybe the fundamentals behind it. I was looking at a company called Cakebox.
What's the symbol?
Yeah, CBOX. It should be trading on the UK stock exchange.
E
CBOX.
B.
Yes. Yeah.
Cake box.
So it is a company that sells cakes. That's it. It's very simple, right? However, if you take a look at the Google reviews, they are at a certain location or along London area. They have great reviews. So to me, that's okay. They have a great product. If you take a look at the fundamentals of the company, the profitability, it does really well. So these are certain really quick data points to have an initial look at the company. But then you can also take a look at Reddit. You can look at other social media to get more insights about the company. And Amazon is not going to disrupt cakes, right? And they're even more niche because they look at egg-free or vegan cakes, and so they're even specializing at a certain part, and they offer franchise, so there is potential to grow. And I think I'm up like 50% of this company, including dividends. And it's
That's
very
great.
simple, and it was easy. This is probably one of the easiest companies to identify for me. But also it's a very tiny one, and it's not getting mentioned at all, which is great. So I think that's also the beauty of being individual investor, that you can do all the research yourself.
So this is a small cap, a tiny cap.
Exactly.
It's 67 million pounds, I believe, and that's not very big. It's pretty small.
No, not at all. Not at all.
So they had a pretty good collapse, like from the high to the bottom. And I'm a believer that just because a stock was mispriced, it still could be a great opportunity. Yeah, if you buy at the right times, I mean, you'd be up on the stock really nicely.
Yeah.
Good.
Yeah, I think I bought at the really bottom, and then there's also quite a significant dividend over a couple of years that I collected.
Yeah.
So
looks great. Yeah, looks really good.
So 5% it's on today's price, but probably I get 7 or 8% on the initial investment.
Yeah. Good. And, one thing that I've noticed, while we're talking about a small business is, so I tend to look at some metrics like I look at the Russell because those are small mid cap stocks, and most definitely, the big cap stocks have just performed tremendously. So that's great. But I thought, small and mid cap stocks will begin to rally because it's great that I owned Amazon, Meta, Alphabet. Okay, that's great. Stocks ran up. But I'm like, well, they can't continue to just go up. Then it would just be like nonsense. It's like, but these small caps, I've been expecting them to start rallying, but that didn't happen. So any comments on what you think is going to happen with smaller cap stocks?
Yeah, I think in general, the bigger a company is, there is more controls around the management team because there is a larger group of investors. There's also all kinds of trusts and funds that invest in it, and there's really a different kind of environment. And in the small cap companies, there is a lot less control on who's running the business. And that really could be a risk. If you have somebody that's in charge that's not really qualified, it's really difficult to have a good return. Now, in the case of Cakebox, for example, the founder is actually the CEO still. So my incentives and his incentives are aligned, right? We both want the company to do well.
Yeah.
In some small cap companies or mid cap companies, that's not the case. And if there is no ownership of the management team, then you have to figure out, are your incentives aligned? Um, the small and mid cap are normally less diversified in terms of products and services. If you take a look at Alphabet, right? There's Google, but there's YouTube, and there's, cloud is part of every company now, the big ones. If you take a look at Amazon, they have the advertising business, they have the e-commerce, they have the cloud. So even if something goes slightly bad in one area, it will likely be neutralized by another area. But if you have a niche specialized business as a small or mid cap, and it goes bad, that's it. Not much you can do. I mean, there are companies that make, for example, boats, right? If the demand for boats has decreased, that's it. That's it. There's no alternative product. There's nothing to compensate for that. So that is why, to some extent, also the bigger companies deserve to trade at a premium, because they have lower risk, higher
Interesting.
multiple.
Yeah, I agree with that. And I'm showing the chart, for the year to date, the Russell
Yep.
versus the S&P. And the Russell has not kept up with the S&P. The Russell's at 2.85. The S&P is at 11.27, according to Google. And that's been one surprise. The market will always, what the market's going to do is anybody's guess. And, the best I can do is really try to understand where there's value, invest, and
Yep.
have a long-term mindset. And I'm going to continue to hold my small and mid-cap stocks, especially the quality ones. But I also need to understand that they just haven't rallied. So I'm not gonna like jump in head first into a lot of mid and small caps. I'm gonna be careful. So while we're in this topic, we have a stock market that on the and I'm going to change this just to the S&P.
Mhm.
So we have a stock market that from the low point in 2022 to this point, we're up 47% in
Yep.
the course of, call it 18 months, 19 months. And in my, and you look at this chart, right, just the last 5 years, if you measure just from the very beginning to the top, it's 91%. It's a very good stock market. But
Yep.
what do you think? Are we just some observations and some comments that you can provide?
Yeah, it has been, of course, a great 5 years, right? Return wise. Normally, I don't focus too much on the share price, even in the 5 years, simply because you cannot really make any. I don't see how it is useful to make a decision today. I compare that to, let's say you want to buy a TV today, right? Does it matter what was the price 2 years ago? If you know it, does it make change? Does it change your decision? No, right? If you want to buy, anything to eat, not really. So somehow the share price is one of the few things that we look backwards, even though it makes no difference, right? So I'm trying to avoid looking in the past, uh, not only for the index but also for individual companies. If share price went up 3 times or went down 80%, makes no difference to my investment decision today. I would like to understand if fundamentally there was something that changed, right? That could explain that movement. Maybe it was overvalued to start with or undervalued to start with. But I don't see too much value added to spend time on trying to understand why something happened. It's more, what is the opportunity, or what is being offered today? Is that something acceptable to me? And do I have enough time horizon ahead of me to actually be patient? And in my case, of course, I'm in my 30s. I'm 30 years old. I have enough time ahead. So the only thing I'm comparing is the company today with the price today, and that's it. Of course, the valuation, it's a much longer process, but ultimately it comes down to that. Um, probably a lot of companies in the S&P 500 are overvalued compared, historically. Um, but look, it can stay overvalued for a very long period of time. So you could make the same argument. Probably, I would say, let's say at the peak of 2022, right? And it went down for, I don't know, like 20% or so,
Yeah, it went
right?
down 20, like 25%.
Yeah. So that was maybe some sort of a pullback correction, but now we're even above that level, right?
Correct.
So the
Yeah.
market will do what it does. If you, I think those who are individual investors paying too much attention to the past price, unless you're into technical analysis and you find that useful, for a pure fundamental value investor, it makes no difference other than really understanding if there is a fundamental reason. So, for example, maybe a company went down because there was a fraud. That is something that I
Correct.
would consider a red flag, but not
Yeah.
necessarily, if there was like Zoom, fear of missing out, everybody was piling onto that. I can't do much about that, right?
Yeah. Hey, can you share what's your investing process? Kind of like what do you go through to evaluate a company,
Mhm.
assess, this is what I think the company's worth, and then making a decision on that particular company stock. Can you take us through your process?
Sure. The first thing that I always do is try to understand what they do. So I don't look at the financials first. I purely want to understand what it is that the company does. Um, in some companies, it's relatively simple, right? It's very easy to understand. Their products are, some products that I know. In other companies, it's a bit of a more, or maybe more time-consuming process. It takes more time to really understand what is going on, because unless I understand that, there's no point in looking at anything else. And through my investing journey, I also want to learn as much as I can about other companies that are more challenging, or whether that's the product or service or the business model. So that is the first step. Once I have that, then I'll look into the management team as well, to understand if some of these individuals have been involved in fraud or some bad activities, or are they trustworthy. And only after that, I will look into the financials, and I will look into the, make a DCF and figure out what would be the best input, given all the information I know. And once I'm done, only then I will look at what others say to see if I've missed something. So there are a lot of analysts out there. I use Reddit once in a while to see posts of other analysts, and there are some high quality ones. Um, I cannot remember that I've at any point in time missed something that was significant. But I mean significant, not something that is tiny that doesn't make any change. And I want to point out why this process. If we take a look at us as individuals, right? Let's say, Victor, I'm coming to you, and I say, hey, Victor, I have an idea, and I need, let's say, $5,000. What would you ask me? Well, what are you going to do, right? You're not going
Yeah.
to say, hey, here's the 5,000. No, you would like to understand, because you want to assess what is the likelihood that that is going to succeed. Let's say that you find that appealing. Then you're going to assess, hey, do I trust him? Because you're not going to give 5,000 to anyone, right? You want to make sure that you know that person. And I'm sure in your life you have, you on the top of your head, you can think of a person that you really trust, that you would give the 5,000, that you trust, that you say, this guy has, or a lady that has done this before, or has the skills, or you just trust him. And on the other side, people that you say, that's never going to happen. I'm not giving my 5,000 there, right? So, and then you can figure out, okay, what is a fair percentage that I need to ask, and so on, right? That's the valuation part. But starting purely from the financials without understanding these first parts, um, I think it's, maybe it comes more natural, because as finance people, that's the most easy to understand part, right? We can look at the financials, we can look at the income statement, the balance sheet, and we can understand the profitability. That's the easy part. But I think that's going into what's safe. It's safe to read the income statements, right? So um, that's why I take this approach. It really protects me from looking at a company that does really well financially, because if I don't understand the products and services, I cannot value it. I don't know how much the company is worth. What are, maybe there are other competitors that develop something similar. If I don't know what it is, I cannot include that into my DCF. I can't. There's no way for me to know that. But it is a time consuming process. So sometimes it takes me like a day if I'm really familiar with the company. Sometimes it could take me a month to
Mhm.
really understand. And after a month, of course not a full time, because I do have my own company. But after a month, the decision could be, this is not for me. And what I do in that case is I would make a note. I looked into this company. This is what I think is the fair price. If at some point it goes below, now I don't have to do all the work, because I have this Excel sheet or Google sheet that keeps track of everything that I've done. Now the next time it will take me a day, because now I know everything about the company.
Got it. Yep. So let me back up a little bit. At the very beginning, I think you use the example of Cake Box,
Mhm.
and so you're beginning to look at Cake Box, and you're like, let's just imagine that you just found out about this company.
Yep.
Can you kind of comment as to how do you view industry sector? Like, hey,
Yep.
this company operates in this sector, and are they the best, or are they the
Sure.
new? Kind of like the environment around this company. Do you take that into account?
Yep. So the first thing I did was I looked at the company's website. They have a nice couple of presentations on about their products. Right. So I can look into that to see, also go back a couple of years to see what the presentation looked like a couple of years ago. So how the company developed over time. Then I can take a look at the Google reviews as well to understand, is
Good
this something
idea.
that the customers like, right? Because this is purely a company in the UK. I'm not there. If I was, I could go and grab a bite, but in this case, that's not feasible, right? So they have many locations. So for each one, I could see the reviews. I could see if they're positive or not. I could see the cakes themselves. Are they appealing or not? But ultimately, it all comes down to, do the customers love them? And that is a universal question. If the answer there is no, a company will not be successful. Um, so that was, for example, it didn't take too much time to get familiar with the product, uh, because it is. I mean, we all know what a cake is, right?
Yeah.
But then it becomes a bit more niche. It's egg free or egg free versions. There are vegan versions that are more appealing for individuals that have a certain religious background. So they're targeting a really different market. And actually, the company was born when the founder's daughter asked for an egg-free cake, and there was no option. So he started a company. So if you take a look at the whole story, the target market is clear. It's very easy to understand who the target market is. And I asked a couple of friends in the UK, and interestingly enough, most of them have never heard of it, because they're not the target market. They're looking for a different kind of cake. But the ones that have heard had positive feedback to me. So it's maybe alternative, yeah, an alternative approach to research. But I really want to understand the company itself. Yeah, that's the founder.
Yeah.
And you
Very
see,
good.
they have a completely different coloring. Like, I cannot recall another company with orange logo. it, it
Right.
it
Yeah.
sounded it sounded like,
And
the first time I saw it, I thought, this just doesn't look that appealing.
right.
It has pink and orange, but the moment I looked into the products, and then the founder himself, yeah, I was quite happy with that.
Yeah, it's a unique story, and the growth is really impressive for the company. So you look at the industry, you look at the situation. Now, let's talk about, okay, you own a stock, and take us through, how do you measure performance? And then let's imagine you own a stock for 3 to 5 years. How do you measure performance and assess, do I want to stay in? Do I want to buy more? Do I want to sell a little bit? Do I want to sell out of the position?
Yeah, the way I see the valuation process is, I'm trying to estimate the fair value, right? It's not an exact guess. I don't know that. I could be off one way or the other by a certain percentage, but I want to make sure that um, um, I see my valuation as a range around it. So if I come up ultimately with a valuation for a company of $100 a share, I would say it's probably between 90 and 110. So, in the ballpark. It's not exactly 100. So I wouldn't focus on one specific number. But what I would do is I have, in my assumptions, I have a certain idea or maybe expectations of where I want the company to be in the future. And if I take a look at the quarterly updates, my question is it still on track? Yes or no? If it is, great. And it's very rarely that that's not the case. If it isn't, then I would have to redo my calculation and figure out, is this something that's still undervalued as I thought, or maybe not? So I do that once in a while, but I don't spend too much time recalculating. I focus on a couple of KPIs for each company, and I try to keep it as simple as I can. The portfolio turnover is for me is really low. I try to hold companies for as long as I can, ideally forever. So if they perform well, great. But of course, if it becomes if there is a point, of course, that
Some
I
stocks
would.
make it easy to hold them forever. Like I've owned Meta for a long time. I've owned Alphabet for a long time. I've owned Chevron for a long. So some stocks make it easy, and some stocks make it a little hard.
Yeah,
they have.
I think we can look back at all of those cases and basically ask the question why. Why is that the case? What do all those companies have in common? That's it. It's interesting also to analyze ourselves. Like, what are the companies that we invest in? Is there something in common? Maybe they all come from a certain place. Like we mentioned at the very beginning, maybe it's Twitter. Maybe all of your ideas come from Twitter. Maybe it's YouTube, and maybe that is positive, or maybe it's not. Right. So it's important to be self-aware of what is going on in your investment process, and that is exactly why I want to not be influenced at all during my process. So I do all my due diligence, and then only in the end I look at the articles of others or videos. Just there could be something that I've missed out, right? I think it would be arrogant for me to say I've looked into everything. There's nothing else. I mean, that's never the case. So it's always good to hear others' opinion, but after that.
How often, like you own a stock? How often do you kind of like start from the very beginning of your process and go through it all over again? Is it once a year, 10 times a year?
Probably not even once a year, because let's say that I have a company that I bought at 75, and I think it's worth 100.
Well, I
Right?
think you said
Hypothetically.
you own Tesla, right? If I
Yeah.
recall earlier. So,
Yeah.
what kind of ongoing you're a holder, what kind
Mhm.
of ongoing research and analysis and decision making are you making on a stock like that? How do you make decisions because whether we act or not, whether we actively make the decision or we passively don't make the decision, we're making the decision on the stock
I
every day
agree.
we hold it.
Yeah.
So if we decide to, hey, buy a stock, put it away, don't ever look at it, you made that decision. That's not who
Yeah.
I am. But tell me how you keep a stock in your portfolio. How much do you do?
So I do follow the company's development. So, for example, if there are any updates product related, I want to understand what the impact would be, whether that is regarding their cars, FSD, whether that's Optimus. So I want to really be familiar with the products, so I can, if I see a really big potential, to include that in my valuation. But ultimately I want to see if they're on track or not. And for Tesla, of course, the cars, number of cars produced and sold is a very important KPI that I look into. But also the development of these other projects. And Optimus is something that could be very big, but it's too early to really be certain about that, right? So when there's an update, whether that's quarterly update or once in a while they have these presentations when they share more about a certain product, I follow those just to understand what is going on. Because maybe tomorrow there will be an update when they say Optimus is not something for us. It won't happen, but hypothetically, we are going to cancel or sell the solar part. uh, that would change my thesis, right? But if
Correct.
there isn't something that's significant, the only thing for me is it on track or not?
Very good. So so you look at the business, and I'm going to use my words, but you have a qualitative assessment of a business and you continue to have a qualitative review of the business. In the case of Tesla, you're looking at it very qualitative because you can look at a product and then you have to make decisions. Do I think the product's really good? The new product, autonomous driving.
Yep.
Hey, is Tesla going to be competitive? And then within that market, who's their competitors? Are their competitors ahead or is Tesla ahead? And all those are qualitative kind of decisions. And I agree with that. I think that's a major part of how I make decisions on stocks. I first have to buy into the business and buy into the industry. I may love, an industry because, like, for example, I raced bicycles when I was a youngster, and I loved it. I loved mountain biking, loved it. I don't invest in any bicycle companies. Why? The industry's not very good. I'm not going to make any money. So I have really nice bicycles in my garage, but I don't invest in that because I look at the company and I really understand, there's a big difference between the profit margins that Alphabet produces and the profit margins that, let's say a retailer produces. It's very, very different. So since I have complete liberty with my capital to buy the type of company that I would want to buy, I tend to sway toward business models like Alphabet, where they have huge profit margins. All right. So
Also, if I may add to that, I think the entry to there's an almost or very low barrier to entry for a new competitor, right? To manufacturing bikes, for example, right? It's different. It's different if you want to create your own search engine. So the barrier to entry is also different. But I do think if you have a lot of information about a certain industry, that should be an advantage to you in investing as well. So
correct.
if you are into IT and you know a lot about certain software, then you have advantage to assess the quality of the company because you know that better than anyone else.
Correct. Yeah, I
So
agree
it's
with
always,
that.
I think this is more of a Peter Lynch approach, right? So he always
Correct.
says, buy what you know. And
Well, what I love about Peter Lynch that that I like to really borrow it. Before I do that, I know that you're a fan of Professor Domadoran, and I am too. I think he's great. I love listening to him. But when we talk about Peter Lynch, here are the things that to me are things that are not talked about enough. Um, he really, if you read his book, Went Up on Wall Street, he was not a finance mind to start. He worked at Fidelity, but he didn't work as an investor or an analyst or a hedge fund manager. He evolved to be that, but what he thought was he could do the job, and he certainly did. He really, and I'm going to use my own words in kind of my recollection of the book. Use your life experiences and your work experiences, and maybe you have brothers and sisters and aunts and uncles and parents that worked in an industry. You have a knowledge advantage, and those are really good knowledge advantages that you can use if it's an industry worth investing in. So I tend to really believe in that. So, I've had multiple jobs and maybe I'm 55, so I've been working for some time. And, I worked in oil and gas. I worked for an oil company as an accountant. So I have an information advantage there. I've worked for a software company for a long time. I've worked in software, deploying software for customers and so forth. So there's certain industries that I have an advantage in from an understanding perspective and having a frame of reference to assess and say, hey, that product looks like it's going to make it versus that product's not going to make it. What about end user adoption on software? I've got a little experience in that area. Hyperscalers, I have experience in that. So those are the things that, every investor watching this, think to yourself, what are those information advantages that I have? And I encourage you to, see if those are industries that you want to invest in, because those are going to be the first ones that you're just going to find intuitive. And at the end of the day, investing is incredibly fun. It's incredibly rewarding. I love it. I've been investing I invested in real estate and made millions. I've invested in stocks and I make just great returns. I'm up 200 grand year to date on my stock and bonds. Awesome. And
Yeah.
that's the reward, but it's incredibly difficult. So we got to simplify, 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 and play to your advantages wherever possible. Try to find those advantages you have and then
Yep.
dig in those areas. And if it's maybe an area, and so there's areas of experience. Now there's areas of interest. Now there's
Mm.
certain topics that you don't have to ask me to go research with a lot of passion.
Yeah.
I love technology. That's why I used to be an accountant. And in
Mm.
college, I had to decide between being an accountant or being a computer science major. I picked accounting. And back in when I was in college, it wasn't clear what jobs were available in computer science, and now there is.
Sure.
um,
Accounting was the sure thing.
but
It's
I
there.
went into accounting and loved software. So at the companies I worked at, I just gravitated to working on the software projects. Very quickly, I
Yeah.
went over to the software industry and worked at a software company. Now, you did not have to ask me to develop software. You did not have to ask me to do all kinds of software related things. And so to every investor watching and listening, so it may be you have experiences in an area where you can use it as an advantage, but there are also probably areas that you're really interested in. You know, if you're interested in, you know, let's say healthcare, and you really have a passion for healthcare, and you can kind of really have without anybody asking you, you just gravitate to it. Your chemistry and all that good stuff, that is a huge advantage you can have. If you dive into
Sure.
that, you'll have huge advantages. You'll probably be a way better investor than most people. I could barely pass chemistry.
Sure.
I invest in
That's
healthcare
fine,
companies,
right? Of
but
course.
some people they just love that stuff. So
Yeah.
that's another thing I'd leave you guys with. So
I agree.
um,
Probably the same individuals would say, "Oh my God, accounting! Come
oh my
on, I
god,
could barely pass that."
did they
That's
run out of the room?
luckily we didn't have that in the chemistry. But I fully agree with you on that.
Let
Fully
me
agree with
catch up on some comments. I've been kind of neglecting comments, so let me
you. Yeah,
catch up. So
sure.
first,
Please go
Empty
ahead.
Design Mill, thanks so much for joining. Really appreciate the compliment to Costa. I'm with you. I've benefited greatly from his knowledge. And then my man Scott with Scott's Due Diligence is on. Thanks so much, Scott. I've been watching Scott for 4 years, and it's not the first time I say that I have gotten tremendous value from his channel. Empty Design Mill. I'm sorry if this has been discussed. Your philosophy behind following when to sell, number one. Number two,
Mhm.
rebalancing your portfolio. Okay. Tracking your gains and losses when you're putting in money. These are very good questions. We're going to take these on. Okay. I'm going to park them a little bit empty by
Sure.
design. We're going to get back to them, but we're going to cover these. Very good questions. Next one, Anderson. Thanks for sharing, gents, Scott included. Anderson, thanks for joining. Great to have you. And then Scott's saying hello to you. So thanks so much. So let's if it'd be all right with you, let's take on
Yeah,
these.
sure.
So your philosophy behind when to sell. Let's start with that one. You have a portfolio, you have your stocks, when to sell. I'll let you lead, and then I'm going to share with you. I've sold a couple of stocks in the last couple of weeks that I could point to.
Sure. Well, ultimately, it all comes down to what do I think the fair value is and what the price is. It all comes down to comparing those two numbers. The question is, how do I assess the fair value and what changes there? And if I sell, it's either because fundamentally something has changed. It could be COVID, right? There is some event that had an impact on the fair value. It could be that there's some tensions, whether that's, we live in time when there's a lot of geopolitical tension, that you see a couple of wars going on, which is definitely unfortunate. That impacts my assessment of the fair value. Or it could be that the price went up so much that I can no longer justify my fair value. And in that case, I'm willing to sell it simply because the implied returns I had are just not sufficient for me. So even if I'm right, I will get a couple of percents. So those would be, I'd say, the 2 points of first, the fair value has decreased due to new information, or the price went up so much that I can no longer justify the valuation. So I start with a certain valuation in mind. It could be $100 per share. I'm just simplifying it per share. If it gets to 150, well, I know that's too much. I know it's overvalued based on my assumptions. So it doesn't really make sense for me to still have that company in my portfolio. But Victor, I'm looking forward to hearing your thoughts on this, because you've mentioned you've sold a couple of companies. Is there any
Yeah.
similarities here, or what are other reasons for selling
So
company?
so let me set up, answering the question. I think you should. I'm very systematic. I try to have a process that's simple. It gives me the most important information to make a decision to buy, hold, or sell. And if you watch any of my videos, you can get that process. I won't dig into it. So I evaluate a company. I try to evaluate a company twice a quarter, definitely when they do their earnings, and then once where I think take more of a qualitative approach, where I'm not looking at numbers. I'm looking at industry, company. Are they still the company that I think they are? Is the industry still good, or and so forth? So the first company that I sold is Pangea Logistics. This is a company that I found. I found them when they were like $2 a share. It was a while back, and I made great money on Pangea, and they pay a nice dividend. This is like a small cap winner. Okay, why did I sell it? I also own Zim,
Mm-hmm.
and our friends at Zim. This is I love these kind of situations because this is why I play the game. Obviously, we had supply chain issues a couple of years ago. Shipping rates were through the roof. Both of these companies are shipping companies, ocean freight.
Yeah.
And this company, when shipping rates were through the roof, they were making, like, they had a dividend where they paid 60% of the stock price.
Yeah, I
Okay?
remember that.
Isn't that insane?
Yeah.
That's how much cash was coming in, but they also bought a bunch of good ships. So the stock market, Mr. Market, it just left them for dead. Very emotional, left them for dead. And I thought, well, yeah, I get it. Shipping rates are down, but this is the 5 year. I think
Mm-hmm.
they're a good company. They have new ships and so forth. And I bought the company, and I'm up 106% on the stock in less than a year. So, okay, wonderful. Now, my Zim holding went up. So I had to make a decision. Which one of these two companies is out of my portfolio? And it was Panel that I got out of the portfolio. And it was to rebalance my portfolio. And I
Sure.
thought that Zim still has a little bit left on the uptrend. And I told myself, when it gets to $30 a share, I'm selling out of Zim. It'll be a big winner, but uh, I feel a little greedy already on it, but I still think it's going to go up, especially recently. They've had good news. So that's one example. The other one is, so here's one where qualitatively, I I love Roblox. I love their business. It resembles YouTube. It resembles these businesses where, like YouTube, right? Alphabet does not have to create any content. Yours truly and Costa and Scott, we create content. We put it on
Yeah.
YouTube. Then people that want to watch it, they watch it. So they don't have any production costs. They don't have to pay me anything. And and then people use their own computers. So you guys know that type of economy is really valuable. So I like the business. I love the business, but their fundamentals continue to decay, and their fundamentals, as seen on, they have growth, but I think their cash flow has really been spotty.
Mm.
When I was buying them in this era, I'm like, holy smokes, these guys are phenomenal. And this may be a little bit of, I was
Mm.
too in love with the company. I'm trying to learn something from this loss. I lost money on Roblox. And it really was that, you know what? If I love, like, I think I used the analogy of bicycles earlier. If I love bicycles, go buy a bicycle.
Sure.
Go
Yeah.
buy a bicycle company. If you love this software or gaming company, download
Yeah.
the app and play some games. But you have, like, Professor Damadorian, one of his phrases that written down I use quite often is a story without fundamentals is just a dream, or it's just a
Yep.
something like that. And it
Yep.
makes a lot of sense, which is, you know what, we can really like a business, but the fundamentals are really important. So those were two exits out of a stock, and the rationale behind it. I look at my stocks again twice a quarter, and they make decisions on them. So rebalancing
Yeah,
your portfolio. Go ahead.
yeah, if I may add to this, I looked briefly at the Roblox. I have not dived too deep simply because I don't think I would enjoy that process. I'm not a big fan of this particular game. So I think even if I do play, I just wouldn't enjoy it. And if I want to understand the company, I have to go through that process. But what I was looking at, if I recall correctly, um, maybe I don't know, a couple of years ago, they also disclose the age of their the demographics, right? They
Correct.
also disclose that. And if I remember, and please correct me if I'm wrong, but there were also a lot of in-game purchases,
Correct.
right? Now,
That's
if
what
you
it all
think
is.
about it, right?
Yeah.
If you think about it, if somebody is, let's say, at the age of 10, right,
Mhm.
where that person has to ask his parents or her parents, hey, I'd like to buy this in-game,
Correct.
most parents would be like, hey, you're going to pay for it, like, you just play it, just have fun. Not everybody can afford that. But if that person really likes the game and continues to play it for a decade, then it's 20. Now, but at 20, well, there is likely some cash inflow, right? Whether that's from some job, some part-time job, or whatever that may be. But that increases the potential of the, or maybe the earnings potential of the demographics, and subsequently the spending potential. And I do think that that is something that needs to be addressed when you look at a company of this kind. If you have very young demographics, the question is, are they going to stay active users when they join this earnings group, like individuals who earn, or not? And if they do, then it would be, I think, a completely different company, simply
Yeah.
because they can afford to spend more. So it is, and this is basically I wanted to share it because to me that is fundamentally what the company is about. Yes, there is a product that is being liked, but ultimately it's, are the users paying for it or not?
Yeah. Agreed. Agreed. Um, Now let's get to rebalancing portfolios. I
Yeah.
have something to say there, but let me let you lead. At what points do you rebalance your portfolio, and what are the reasons to do so?
Yeah, I have probably about 15 companies in my portfolio, so it's not that diversified, one could argue. However, it is diversified across different regions and different industries. And I would only rebalance if I have too much exposure to a certain industry, or because of a significant price increase, or a certain company really went up a lot. But I still think that it will do better. So that's simply not to be exposed in one industry or one geographical area. That's the only reason why I would rebalance.
Great.
And I think over the last 3 years, it happened maybe twice.
And let me
So
ask.
it that doesn't happen that often.
Let me lead you to something that I think would be interesting. Is so first, you're 30 years old, if I recall, and
Yep.
so if you were to kind of categorize, are you 80% equities, 20% fixed income? Are you growth investor? Are you dividend investor? Can you tell us a little bit of that?
I think I would agree with Charlie Munger on this, that ultimately we're all value investors. Even if you invest in growth companies, ultimately you're trying to assess the value, right? In my portfolio, I have companies such as, Cakebox, I would say, to me, it's a value company. It happens to pay a dividend as well. I have Amazon that doesn't pay a dividend. So can you categorize it as a value company? I don't know. I have Upwork, that is a software that's barely breaking even. It's a completely different case. So I wouldn't. I'm not sure if I would put myself in a certain bucket, simply because
Got
the
it.
companies are not that, they don't have too many similarities.
Looking at your
But that is basically,
portfolio, is it 70, 80? What are kind of like big kind of summary of your portfolio?
I'm not sure if I can make that summary. It's just really diversified across industries and across regions. I have a couple of companies UK based. I have some in Germany. I have some in the US. Um, Small cap, mid cap, large cap. So really across. Um, I wouldn't say that there is a bucket of 80% that fits in one category. Not even 50%. But I mentioned earlier, through the investment journey, I also aim to learn as much as I can about different companies, different industries. So I try to keep that as well as part of the goal, not just make money, not just have a good return, but also make sure that I learn more, so that, for example, 10 years from now, it I understand a lot more than I do today.
Awesome. So let me answer the question. I'm 55, and so why did I rebalance my portfolio? Is age. So I'm
Mm,
looking to retire. I'm not sure how soon. I still enjoy my occupation, and I'm going to keep doing it until that changes. Um, but I've I've gotten more fixed income into my portfolio. One reason is the rates of return.
yeah,
Interest rates have risen so much, and it's
yeah,
like, hey, I don't mind buying a bond with an oil company that pays me 11%. Don't mind that at all. And
sure.
so I'm probably using big numbers. I'm probably 80% in stocks, 15% in bonds, and about less than 5% in crypto and
Mm,
digital currencies.
sure.
And now, what causes me to rebalance? Age, and not necessarily that, hey, I need fixed income today, I need income today, I need dividend stocks today. No,
Mm,
but I'm a believer that what I want to do 5 years from now, I need to start practicing today. And I'm not
of
going to be
course.
a good fixed income investor like by snapping my fingers and watching 3 YouTube videos. I need to practice. So I've been buying bonds and practicing, like, okay, how do I buy bonds? How do I buy a good investment in bonds? How do I buy crypto? And crypto could provide an income. And so I've been doing that. So that's how I rebalance. Now, rebalancing also includes for me, and I'm going to show something real quick because I think it'll help. So you can see in the
Sure.
background that we're looking at the heat map on sectors.
Yep.
So semiconductor has been on fire, and anybody
Mhm.
who's missed it uh, has not had internet connection for the last 2 years. So I owned Broadcom, and I did really well with Broadcom. And two things: one, I thought, based on my valuation, that the stock that I owned with Broadcom was probably 20% uh, priced too high. It was priced at a premium,
Mhm.
20%, combined with the run up in semiconductor. So I sold Broadcom at a big gain. I sold TSM a while back at a big gain. And so I rebalance based on, if I'm looking at what I think is an overly priced market in an overly priced sector, I don't get greedy. I cash in some of those gains. And it's a lot easier right now when I can put that money in cash and earn 5 to 8%. There's a new program that I'm using that is going to pay me 8.1% on cash for 3 months.
Yeah.
That's very easy to do.
Yeah.
Cash in some of these huge gains, because if I think it's an expensive market. If we have another correction like we did in 2022, where Nvidia went down 65%, where Meta went down 85%, I would really kick myself in saying, why didn't I rebalance? Why didn't I take some of those gains, lock them in, put the money earning 5 to 8%, and wait until this market begins to kind of show, I think, a little bit more balance. I think right now we have an expensive market overall. All right.
Yeah.
So
Could
good
be.
question.
Yeah. Thank you for sharing. Yeah, your process. It kind of also outlines your strategy, right? Because it's kind of a portfolio strategy as well.
Yeah. And then the last piece to it, an empty design mill. Good question. Tracking your gains, losses. When are you putting in money? Okay. So I'll let you start, Costa.
I don't track too often. I probably do it once a week, sometimes once a month, even. Like really depends. I'm more focused on the company itself. I really think it's more important to follow if the company is on the right track rather than the price, unless it went up too much. I'm not concerned if the price goes down. So there have been way too many times when I've increased the position because of the price decrease. So I'm really happy when that happens. Um, but I don't track too often. I'm basically, the way I look at it is this activity going to make add value or not? And if I see the gains and losses today and tomorrow, have I achieved something? Do I have, so if it went up or down 5%, not really. So I don't really do too much work there, to be fair. Maybe I shouldn't, I'm not sure, but for now I don't have a case to do that. Even if it's automated, I can log into to the broker and just
Yeah.
take a look at the position. That's more than enough to me.
Yeah. And to answer the question for me, so my first job out of college was I was an accountant, and I ended up getting to a position of controller. And every month we would report the performance of the business, income statement, balance sheet, statement of cash flows every month for a $360 million operation. And
Mhm.
so, having said that, now that I have my own enterprise, which is all my stock holdings and real estate and so forth, I follow the same pattern: is every month, every quarter, every year, I really look at performance. Now, I may look at performance and say, hey, steady as she goes. That's kind of like what I expect this stock to be doing. But I also look at anomalies, or maybe like I was saying about Zim. Zim's just taken off, and I'm definitely, it catches your attention when it's going up so fast. Why is it going up? And try to understand it, and then rebalance where needed. But CBS is a stock that I'm losing money on, so I don't want to share all positive, sunshine stories. But
Yep.
let's talk about a stock that's been under pressure. And CBS, I believe in. I believe in the business. I think it's a diversified business, and
Yep.
I also believe in their fundamentals. I'm like, uh,
Yeah.
overall, like, remember how I was talking about, I like to look at a company, I like to look at the environment they're operating in. Healthcare stocks have lagged,
Yep.
definitely technology. Everything's in communication services, and technology are just absorbing so many gains. Healthcare is been held behind. Now, yours truly, over the last 30 years, I've done really well with healthcare. And
Mm.
we need healthcare. Good or bad economy, we go to the hospital. Doctor says, go get this medicine. We go get this medicine, and we take care of ourselves. Long story short, CBS has probably received a lot of my attention over the last year, frankly, because it's such a either it's a misunderstood stock, or I'm wrong, or there's just something that doesn't line up here.
Mm.
How does the company continue to grow their revenue, continue to grow their cash flows, and fundamentally, to me, look better and better quarter after quarter? But the stock price is telling me something different. So it compels me to reanalyze and just make sure I understand the company. I haven't sold CBS. I continue to buy shares, but that's how I track performance. And I think it drives some of the behavior on my side based on things like CBS being the example. If the stock market's saying, hey, Victor, you may be wrong. Okay, stock market, I'm listening, but it doesn't mean I'm going to sell it. I'm going to go from step 1 through step 20 of my process. Okay, what's the business? What's the environment? Did these guys
Mhm.
get sued and have a class action lawsuit like J&J or 3M
Sure.
had to deal with?
Yep.
Did
Yep.
are the customers unhappy and they hate them? Are they losing customers? No, they're growing their revenue. They're profitable.
Yep.
They're doing a lot of the right things. Well, Mr. Market hasn't been wrong only once. Mr. Market's been wrong a lot of times. Like I showed Panel earlier, that was a phenomenal win. Zim, phenomenal win. Why? Mr. Market was wrong about Zim. So they may
Yep.
either Mr. Market's going to be wrong on CBS, or I'm going to be wrong. and I'm either going to make money or lose money, but I need to trust my analysis or I have nothing. So
Sure.
that's how I track gains and losses, and that's the behavior that it drives.
Yeah, I looked into CVS only once. The only part that it was difficult for me to fully understand was the potential competitors, because Amazon has been mentioned way too many times, or maybe related
But
to
Amazon
healthcare.
got out of healthcare, by the way. They decided that's not going to be a business
Yeah.
they want.
So I remember that maybe it was 2 years ago. The rumors were still at a really maybe at the peak even. So I remember that story, and I was just struggling to understand how to incorporate that in the valuation, because it could have a significant impact. But
Yeah,
yeah, the market does what it does, right? It won't. That's why I mean, in my opinion, in the short run, it's not efficient. In the long run, it corrects itself, and it could
yeah.
overcorrect it, but still, uh, yeah,
Well, we saw that in Zim, and I could show that very quickly in our friends over at Meta, right?
yeah,
This is a story that I love just studying. Is in 2021, the stock Mr. Market said Meta's terrible, sell it, and it went down
sure.
74%. And all the people who thought, no, I don't agree with you, Mr. Market, we went up
Yeah.
415%. So
And I recall that there was, because I also had Meta for part of this bull run. I recall there was a lot of the negative sentiment was basically Zuck being
metaverse.
too bold on the vision, right? I want my metaverse, and just pouring a lot of cash into it without almost any return, right? So basically, it was seen from, hey, we have this really good cash generating company, and now we have that cash poured into something that's uncertain. So a lot of investors backed out, and look, they have their own reasons, right? But was it too much? It's really difficult to answer that question unless we really know what the impact of that metaverse project would be. So
Yeah.
it could be that, of course, it was an overreaction, but where is the fair value, right? That really depends on the successfulness of the metaverse, right?
All right. So let's get into I think it was a request by Anderson. If you want a toy to play with, I certainly do. I spent this afternoon looking at HCA Healthcare, try to figure out what Michael Burry is seeing in this stock. So HCA Healthcare, interesting. Okay, it's been on an upward trend. I like using this app here. So HCA Healthcare. HCA Healthcare, through its subsidiary, owns and operates hospitals and related healthcare entities in the United States. It operates general and acute healthcare hospitals. It offers medical and surgical services, included inpatient care. Okay. So it's a hospital organization. Well, that's really interesting. And it's been doing good over the last 5 years. It's up 28.5% in the last year, and it's up 26% year to date. Wow, very good. Very small dividend. Analysts are saying it's a little overpriced, and I can understand their sentiment because it's gone up a bit. $89 billion market cap. So I'm going to go through my process. Costa,
Yeah,
bear
sure,
with me.
sure.
So I like seeing
No worries.
revenue growth. They're growing their revenue. Okay, good. This is a hospital, so I'm not expecting that they have the same growth rate as, let's say, NVIDIA, unless they start putting GPUs in the surgical room. And okay,
It
so
could
we
help
have
with the warming up the some of the rooms. Those
AI robots in the surgical room.
AI, indeed.
So balance sheet, let's make sure we don't have too much debt. So we have $935 million of cash, and total debt, we have 41.5 billion. Okay, that might be a little bit of a problem. Statistically, I like to look at EBITDA to debt, and I like it to be less than 3. It's 3.4. Is that a complete showstopper? No, it's just not. It's just barely a passing grade potentially. I just have to be leery of debt. Debt is becoming way more expensive with higher interest rates. So let's kind of leave that saying, okay, it's not good, but it's not going to prevent me from looking further. All right. So cash flow wise, they generate let's call it 4.7 billion in free cash. Now, I take a quick stab at the value of the company is slightly growing. And if I multiply their cash flow by 20, I'm going to get roughly about 90 million, $90 billion. And they're priced at around 90 billion. So my high level guess is that they're fairly priced, and analysts are agreeing. Okay.
I should point out you looked at the cash flow from operations or the free cash flow.
I think let's make sure I didn't make a mistake there. So free cash flow is this line, right?
Yeah.
And it's 4.687. I rounded up to 4.7 billion.
Yeah, sure.
Multiply
You
that
have to
times
also
20, I get like low 90s
yeah, and then
billion.
there's all the debt that's on the balance sheet.
Yeah, and that's so you bring up a good point, right? Now my cash is worth 90, call it 4 billion, but I have to deduct all that debt, which was about 40. So really that what I call equity value in a company is more in the mid $50. So I actually think this, if I used my process, I would think that this stock is overpriced. The
Yeah.
stock, go ahead.
Yeah, I was going to say, so I'm not that familiar with the company. You did a really good walkthrough to the initial phase to really understand what it is about. I would like to see. I can imagine that probably a big part of the debt is leases, either because it's a hospital, so probably many locations, right? Given the market cap, so probably they have a lot of locations. If they have lease contracts there, it is part of the debt. So it's probably this is my guess, but of course, if I'm looking into this company, I would like to understand if I'm right or what it is. And then if you take a look at the debt, I think it was increasing over time. Now it could be because they're borrowing, but it could be just because they have more locations or they have more signed lease contracts, and therefore that also explains the growth in their revenue. But then I would also take a
It
look
has been
at
growing. It's been growing over time. Yeah.
yeah. So maybe that is also the reason why it's growing. They have more leased contracts for new hospitals. Therefore, that is and not only for the location, but it could also be for the equipment that they're using, right? But then I would like to understand, given the growth in locations or in hospitals, how does that translate into revenue per hospital? Are they opening bigger hospital or more profitable hospital, or maybe more revenue generating? Uh, and for example, is that even because if you take a look above the revenue growth, it was, I think, below 10% most of the years, right?
And look at the interest expense. It's gone up.
Yeah. But also part of that is leases, right? So on the lease contract, that is also an interest expense. So regardless of the form of the debt, but it would be, for me, it would be different if they increase their debt for something that is, let's say, unreasonable or irrational, or they just use it for something that didn't turn out well, compared to if they actually do it for their own operations. So that's really why I always look at the long, the 10K or 10Q. Really, I know that those are documents that are not fun to look at, but
Yeah.
I enjoy that process as well, and then look at all the accounting notes as well, or
Yeah.
not all, but the ones that are significant.
And on this one here, I'll voice that this would not be an investment that I would be interested in. I think the debt combined with, once I get to their free cash flows and their valuation, they're currently
Sure.
89 billion. This would not be an investment I'd be interested. I wouldn't pour a ton of time in it. Michael Burry might be seeing something that, I can't see, but, he can run his investments and I'll run mine.
Yeah, and it doesn't mean that he's 100%. Nobody's 100% correct. So
Scott
he could also be wrong.
Zim had a solid Q1, and Zim brought back their dividend. I think that's creating some noise. Let me catch up on some comments, Kosta, and then it looks like we're going to wrap up like in 5 minutes. I don't want to keep it too long. So empty by design. To clarify the selling question, I was hoping to get your thoughts on process following two scenarios. In case you hold the stock, one which is overvalued, but the product financials are great. That's a very good question. Okay. So you're sitting on a stock. It's done well. It's exceeded its valuation. but you still believe in the company. Kosta, take that on.
Yeah, it depends what is so if it is overvalued by 5 or 10 or 15% or even 20%, I would say that's fine. But if it becomes so overvalued by 50%, then not for me. Um, it could be still a great product, but it doesn't mean it is a great investment for me. So for me, there is an upper limit for me holding a company as part of my portfolio. I'm not sure
Yeah.
if what is your thought process there.
Yeah. So that's a very good question because let me try to get back to where I wanted to be. All right. So here's my portfolio. And there's a couple companies. The main company I want to talk about is let's talk about Coinbase. Okay. So Coinbase is really hard to value, right? Because it's a brand new business. And I'm glad that I bought the stock. I didn't pour a ton of money into it, but I'm up 146%. And based on my free cash flow forecast on Coinbase, it's overpriced by 35%. So do I sell Coinbase? No. Why is it? They're number one in their category. They are the very best in the United States. They're publicly traded. They're becoming the trusted brand in cryptocurrencies. They continue to grow their top line. They continue to grow their free cash flows. So I expect their fundamentals are going to continue to change and evolve. So first, the business, right? I still believe in the business. I still think they're the number one exchange in the United States. And just their stock price has really risen so high. I'm just going to keep the stock. It's a conscious decision not to sell. And that's an example of keeping a stock, even though the fundamentals say you should have sold 34% ago. But some stocks, Coinbase is also really young, right? This industry is really young. Cryptocurrency keeps expanding, keeps getting bigger. ETFs for Ethereum are out. You can earn a dividend or interest rate, call it whatever you want, Ethereum on Coinbase. So that's an example. I've also have like Uber. I love Uber. I'm a big investor in Uber. And if you look at my valuation, Uber is slightly priced at a premium. And it may have come down enough where it's priced fairly. I did not sell Uber when it was flying a little higher. Why? Uber's number one. Uber continues to expand globally. Uber's expanding in Uber Eats. They do a few things, kind of like Alphabet. Alphabet doesn't do 100 different things. They do a couple things really well, and those things they do are very profitable. Uber is doing a couple things very well, and they continue to grow. So I'm keeping Uber, even though at periods of time, they're priced higher than my valuation. All right. Good question. So we're going to boogie a little bit faster because I don't want to keep Costa on for like
No worries. Appreciate it.
Nvidia.
I guess that's excluding NVIDIA.
Yeah. I don't quite understand this question, so I'm going to move forward.
No, I think the question was
Etsy. Okay.
Could you go back to the previous one? The question was which other companies are reinventing themselves?
Excluding NVIDIA, excluding Intel. Okay.
Yeah, I guess a lot of companies are reinventing themselves. I'm not sure if I have a really good example here. I do think that cloud, for example, cloud storage is relatively new.
Well,
Maybe over the last decade.
I have a good example that I don't know if people would appreciate, but Chegg, are you familiar with Chegg, the educational platform?
Yeah.
So Chegg is really popular with students, and I have two sons in college, one studying a PhD and one studying to get an economics degree. And so I had a two-person peer group to ask specific questions around Chegg. Hey, what do you think of Chegg? Is it worth it? They also use ChatGPT. And so when they compare the two, they're like, no, I'm still a Chegg subscription holder because Chegg really does give you a lot of support to help you understand a course or a topic and help you through that course that you're taking in college as well as high school. All right, period. So how are they reinventing themselves? Well, this little thing you may have heard of called artificial intelligence, AI, has arrived, and that's going to completely disrupt this industry. So Chegg is not kind of saying, oh, it's not going to disrupt our industry. They're like, no, we're going to disrupt ourselves. So they're pouring a lot of money into their own large language model, which they're going to begin to have a subscription on, that is really going to take the experience of the customer that's looking for information and support for their educational journey. So they're reinventing themselves. They're disrupting themselves before somebody else does. And that's an example of a company.
Sure. Fair enough.
So Scott just bought Etsy. So I'm going to blindly buy that stock because I just do whatever Scott says. But what are you going to do, Kosta?
Related to Etsy?
Yeah. What's your comment on Etsy?
It's a tough one. I looked at Etsy, and I think the environment has changed quite a bit over the last couple of years. There are new competitors. I think Temu, if I'm pronouncing that correct, has really. I think we should take that into account as well. Like the Etsy today is operating in a different environment. I mean, these are homemade or do-it-yourself. Some various goods and services, but it's a tough one. It's a tough one. I'm not sure how it's going to perform in the coming year. It is still generating cash flow, but I don't know how the environment would look like in 2 years. I'm not sure. It's safe, to be honest.
High level
Czech,
looks good. They're growing, which is good. Their latest quarter only grew a little bit.
Yeah, but if you take a look at inflation, for example, for 2022, 2023, it's not that much of a growth, right? So if we adjust for that, it's not too big. But look, I wish Scott a lot of success, and I hope that it goes up. And
yeah,
one of the things that I liked, it's more of maybe a value that I want to share is, as human beings, we should respectfully disagree on topics.
Yeah,
it's perfectly fine to have different opinions and say, hey, I don't think that's the case, but I still wish you the best, in this particular case. Or we could have completely different opinions about companies, right? And that's perfectly fine, right? There is no universe in which we all think the same for all the companies.
Yeah. And all joking aside, I know I said that I was going to blindly buy Etsy.
Of course,
I'm going to look at Etsy. I think it's interesting. Just the pieces that I looked at very high level. Their cash flow looks really good. 665 million the last full year, and their market cap's really low. Now these guys are different than Amazon. Why can't Amazon just do a Prime service to replace these guys? Etsy is in the handcrafted kind of marketplace where you want a unique item and you're kind of giving somebody a gig that's going to produce a product. We have a cousin who's kind of more of an artist, and she has a whole workshop. It's like going to Santa Claus's workshop, and she gets all these birthday orders and anniversary orders, and it's very people love that stuff. So I'm gonna take a look at it and see what happens. Good luck, Scott, and I'm gonna blindly do everything else you say, but not on Etsy. Kosta has taught me to go to investor relations and reach 10Ks, company presentations. It is stuff at the big. This is a great lesson. FYI, I've worked really hard for my money. So what I invest in is really meaningful. What Kosta promotes, right? And I think I said this at the beginning of the video of the live stream, and I'll say it again, is when I watch his videos, I have to put everything else away because he makes me slow down and really listen, because I have to understand these big concepts he puts out there. And I would say that piece of advice is great advice. If you are going to understand a company, you have to understand their investor relations page. You have to understand their 10K, in my opinion, right? And when you read through it and you slow down, you're going to see things that didn't quite make it to a platform like our friends at Stock Analysis, right? Stock Analysis is great. Not saying something bad about them, but when you go to the investor homepage, let's say we go to Etsy, and
there are a lot of questions that
you're going to get to know this company that much better, and that's great advice.
Yeah, I appreciate the kind words. I mean, we previously saw a company with a lot of debt, right? We didn't have any information about the debt. What is it? What is the interest rate? If it is, borrowing from banks. So there's a lot of details there. I can understand that it could be boring, but of course, if you enjoy it, then that's great. If that's not for you, that's also fine. I mean, it's not about if you go down this rabbit hole, you should enjoy the process as well.
Awesome. So Scott found some information on HCA, company engaged in illegal accounting in the 90s. So hopefully they cleaned up their act and aren't doing that anymore. Uh, so
Yeah,
HCA
acquisition is
Healthcare
definitely an
spent a
interesting
combined
topic.
635 million on acquisitions in 2023, according to yeah. So they've been growing and they've been probably buying other hospital locations. Like, hey, we're going to buy this hospital and put it under our brand. Good
Mhm.
stuff. Yeah, thank you for watching, Anderson, and for all the questions. Yeah, and thanks,
Appreciate,
Scott, for
appreciate.
the contacts. And you're always right until you're wrong. That's great. That's me
Always
too.
right.
I'm always right until I'm wrong. Now, one thing that I would put out there is I always say that, um, investing sometimes like learning from others is literally free. It costs me my time. But sometimes I have to pay tuition in the form of like I sold Big Five sporting goods. I lost a pretty fair amount. I think I lost like $30,000 on that investment. I held it for multiple years. So that was my tuition payment for looking at a company as a small cap and underappreciating some of the forces against Big Five sporting goods. So I would say that out there. So all right. So what? So Ian, sounds like I showed up late. Been busy. Okay, you'll catch up later. Cool. All right.
No worries, Ian. We
And I
can
think
have
this will
another
be the
one
last
at some
comment.
point.
Cost. So this is Scott's due diligence, and I really respect this guy, Scott. Costa really knows his stuff. So everyone, listen up, and I agree with that. Costa, this was a really cool live stream. I'd love to do this again. Let me know if there's anything I can do for you. I really enjoyed the conversation, and I just want to thank you again for all the videos you produce. I know you spend a lot of time, and you put a lot of care into those videos to try to really teach everybody, including myself, and kind of learn some of these finance concepts. So thanks so much.
Thank you for having me, Victor, and thank you as well for sharing all the thoughts of yours and also all in the form of videos, but also in this conversation as well. I think it is important to share all of that information with one another and see how we can help each other. I
Agreed.
appreciate it, and we keep in touch. We keep in
We'll
touch.
do. We'll do. All right, everybody. Enjoy your Saturday. Take care.
Take care.